It's late 2026. Markets are buzzing with AI hype and clean energy breakthroughs. And you're kicking yourself because you missed out on the next big movers. All because you weren't watching the right plays. What if I told you to under-the-radar stocks? Could be the spark that lights up your portfolio before the year wraps. We're talking nuclear innovation meets SPAC magic. And robotic AI that's automating the future faster than you can say bull run. Stick around, because in the next few minutes I'm breaking it all down. No fluff, just facts, trends, and why these could be worth your eyeballs. Before we dive in, let's get real for a second. This video is for educational purposes only and does not constitute financial advice. I'm not a financial advisor, and I'm not telling you to buy, sell, or hold anything. Markets are wild. Do your own research. Consult a financial advisor. And remember, past performance isn't a crystal ball for the future. All data here is pulled from reliable sources like Yahoo Finance, company filings, and recent SEC updates as of January 14th, 2026. We're talking about a SPAC that's betting big on nuclear power, and an AI company that's automating work faster than ever before. So stick around. In the next few minutes, we'll look at the facts, the trends, and why these two companies are getting attention. No hype, just clear breakdowns. All right, first up is HCM to Acquisition Corp, ticker symbol HOND. If you like stories about mergers and new clean energy plays, this one's worth watching. HOND is what's called a SPAC, special purpose acquisition company. Basically, it raises money from investors and then looks for another business to buy or merge with. They don't make products or sell services. Their job is to find and partner with a company that's ready to grow fast. HOND was founded in 2024 and is based in Stamford, Connecticut, close to New York's finance hub, full of deal makers and investors. Think of HOND as a matchmaker between investors and private companies that want to go public. Here's where things get interesting. Back in March 2025, HOND announced a merger with Terrestrial Energy Inc., a Canadian company working on advanced nuclear reactors. We're talking about integral molten salt reactors, IMSRs, small modular nuclear reactors, that promise to be safer, cheaper, and carbon-free. The deal values Terrestrial Energy at $925 million before the merger and aims to list the combined company on nasdaq under the ticker IMSR. When the announcement dropped, HOND's stock jumped nearly 5% in a single day. Then in September 2025, the U.S. Department of Energy selected Terrestrial Energy for its Advanced Reactor Pilot Program. The Nuclear Regulatory Commission also approved Terrestrial's main reactor. Design criteria, a major regulatory milestone. Terrestrial is already partnering with major energy companies, and this merger could open the door to billions in clean nuclear funding. Experts estimate the small modular reactor market could reach around $195 billion by 2040. Which explains why investors are paying attention. Financially, HOND went public in August 2024, raising $230 million in its IPO. Over 100% of that money sits in a trust account, waiting to be used for a merger. The stock has seen wide swings, from around $9.96 to nearly $25, which is normal for SPACs. The balance sheet is clean, almost no debt, and income mainly comes from interest on trust funds. SPAC activity has rebounded strongly after collapsing in 2022 and 2023. 2025 saw over 50 SPAC IPOs, helped by lower interest rates and renewed investor confidence. HOND stands out because it's targeting a mature clean energy company, not a speculative startup. If the merger closes, it could become one of the first publicly traded molten salt nuclear companies. Risks remain: regulatory delays, policy changes, and execution challenges. But if it works, this could be a historic clean energy play. Now let us shift gears from clean energy to clean workflows, because this next stock is all about AI automation. Meet UPath Inc., ticker PATH. Founded in 2005 in Bucharest and now headquartered in New York, UPath is the global leader in robotic process automation. UPath builds software bots that handle repetitive computer tasks, invoices, data entry, reporting, freeing humans to focus on higher value work. Their platform is used across banking, healthcare, manufacturing, retail, and more. UPath's Q to revenue came in at $362 million, up from $316 million year over year. Net income turned positive, showing major improvement from last year's losses. For fiscal year 2026, UPath expects revenue of about $1.57 billion. Their gross margin sits above 83%, which is extremely strong. Valuation metrics show a premium, high PE, and EBITDA multiples, but earnings growth is accelerating fast. Revenue growth is steady, and earnings jumped over 100%. UPath made headlines after announcing partnerships with NVIDIA, OpenAI, Google Cloud, and Snowflake. The stock surged sharply following these announcements. Earlier, UPath also acquired Peak AI, strengthening its predictive analytics and machine learning capabilities. The global RPA market is expected to grow from about $6 billion to nearly $23 billion by 2030. With healthcare and small businesses leading adoption, the takeaway: UPath sits at the center of the hyper-automation revolution, where AI doesn't just assist, it executes. Low debt, strong margins, and elite partnerships position UPath well, though slower enterprise spending remains a risk. So let's recap. HCM to Acquisition Corp. ASPAC betting on next-generation nuclear power with massive upside if the merger succeeds. UPath Inc., an AI automation leader, turning artificial intelligence into real productivity gains. The lesson here: watch fast-growing sectors like nuclear energy and AI automation. Look beyond price, focus on fundamentals, and always do your own research. If this breakdown helped you understand the market better, hit like, share it with fellow investors, and drop a comment. Which has the brighter future, nuclear or AI? Subscribe for more weekly deep dives. Thanks for watching. See you in the markets.